So we saw quite a bit of flow on NASDAQ and the S&P 500 based on just Friday. Remember, this is just Friday alone. Very, very unusual, especially as of recent, to see this amount of flow in general, let alone it was all put flow. This is not filtered for only puts. It is both calls and puts, yet it is 100% puts to 0% calls. And this is filtered also for over 1 million in premium to see what the whales were doing. In this case, the whales were buying a lot of puts. And as you can see here, a lot of these also happen to be above the ask. They are highlighted in yellow, plus are fairly close in expiration for the majority of them, at least early in the session. That was as we were increasing in price in the S&P 500. We saw a lot of the 9/15 for September 15th expiration, and then also October 20th expiration. As we went on later into the day, there was more leaps that were being added or close to leaps. You can see here the March 15th. By the way, a leap is typically characterized as an options contract that is over a year out in terms of expiration. In this case, there were quite a bit of Marches as well as January contracts. And what's interesting is a lot of these were being added around the morning time period. And if you remember, if you look over here just at SPX, we were climbing quite a bit in the morning, specifically early morning session. As you can see, we just had a lot of upside, but the end of the day closed red, and it was basically like a waterfall sell-off after seeing a top form up here around 4,440. Also critical to note, if you remember, there was a potential cup and handle pattern here, which was working out very well until right around that midday point. We did have that sell-off. In order for there to be a cup and handle confirmation signal that would confirm more upside to the high 4,400s, you would need to see this gap over here close. The gap from Wednesday to Thursday of last week was unable to fill. It got fairly close. As you can see here, 4,440 to roughly 4,446, but it did not close. So there still has yet to be confirmation of that cup and handle pattern playing out. So going into this week, what is very critical is this low that we made on Thursday. If this is unable to hold, we will see more downside to the lower end of the range around this 4,330 to 4,340 level. It'd be a fairly strong push back to that level as well, just because this was a prior consolidation range. You tend to see a more flush scenarios or just acceleration of selling on a retest, or at least failed retest of a prior consolidation zone. So in this case, if price is able to get back under 4,385, then watch out, there would be more downside. But at the moment, it is still heightened. Again, yes, we didn't confirm the cup and handle pattern, but until there is a break below here, we're likely to see this be supportive, especially because this is the pre-OPEX week, which characteristically this week has been supportive overall to the market, specifically the S&P 500. So again, this is your pivot for the week, 4,385. Above, you will see more upside to the 4,450 at the very least level, and below we will see downside to the 4,330 level. So again, just for the visuals of this this level right here, roughly, you're going to want to be watching. And by above or below, what do I mean by that? Mostly the hourly candle is going to be what I'm watching. You could also watch the 15-minute, but it's going to be a little bit more volatile. It can go back and forth. I'm not watching the 1 minute or 5 minute chart in this scenario here. That's mostly beneficial for just quick scalps intraday, but the hourly chart, as you can see over here, if we did have an hourly close back under 4,385, my bias would shift for that downside back down to 4,330. Otherwise, as of now, even though we did have quite a bit of a bearish sell-off to end last week, we still are technically above this pivot. So if it does retest, which is likely going to happen, wouldn't be surprised to see a gap down on Monday either, just based on how Friday closed. If we do retest this, it will act as a support at first. So this is basically what's going to define this week. And at the moment, at least based on the flow, it seems like there is some more downside to come, especially because a lot of these were out the money contracts. We saw a lot of the QQQ ones being around the 330, at least for those 315.24 expiration. But then also for SPY, 435, we saw 418, 425. So quite a bit out the money for the earlier ones in the session. But overall, a lot of premium backing these out the money puts with fairly close expirations. That could mean a lot more downside, permitting a breakdown below this level. Of course, look for confirmation specifically this week because flows are more bearish, yet we know that the week prior to OPEX, at least this year, has been more supportive for the market. So you kind of have conflicting signals this week, but it will all be dependent on how this pivot fares, especially between mostly Monday, but then also Tuesday. If for whatever reason we saw consolidation on Monday, everything is dependent on if it stays above or below this 4,385 level. Another good way to derive key ranges is through the dark pool levels feature here here on Cheddar Flow. Last week we saw 2.1 billion in premium at the 439.74 level. Nothing too crazy, but still over 2 billion is a decent amount, especially on a consistent basis. And over here we had, yet again, around that 2.1 billion, we had 2.2 billion at the 443.19 level. A SPY closed below this print by quite a bit. This was near the highs you can see here on this small graphic, close to the high of this up move so far. And going back to Wednesday, we also had in the 2 billions 2.8 billion in premium at the 444.03 level. So we had two of the 2 billion plus prints at this high level over here, as you can see on SPX, right around where my supply zone is, this key red zone, which right now has acted as a hard resistance spot twice. We had the one back here before a minor pullback, and then over here we also had one. Again, why this pivot is critical is because as long as the S&P 500 could stay above 4,385, there's a potential cup and handle pattern, like I said in not only today's video, but also the last weekly video that I posted here on YouTube. And a cup and handle can shoot this up to the high 4,400s, 4,500 being the max of that move. Otherwise, again, if it goes back below, this would end up turning into a double top pattern. So there's two potential patterns here, all dependent on how price reacts to this level. And you might be asking, how is this applicable to a trade setup? For example, a retest of this level is a possible long position. I wouldn't hold more than this week. If anything, it would be into early next week at the max, like early Monday and Tuesday of that OPEX week is what I mean. So this week, we still have 5 days to go in terms of trade session. But if this were to be lucrative and you see a bounce off this level, I wouldn't hold it longer than Monday or Tuesday of that OPEX week if this is a viable long position. Stop for this position off of a retest of around here would be an hourly close below this level. You would end up stopping out. There's still potential that it can pop back up afterwards, which you could, in theory, enter off of that. I tend to not like that choppy price action around a key pivot, especially around the lunchtime hour. It's better when there's volume backing it, so within the first 2 to 3 hours max of the trading session. But that's a possible setup on the long side off of a retest here, with your stop being very conservative of only an hourly close below that level. So you're not looking at more than 20 points risk for the most part. Of course, an hourly candle could be more than 20 points, but you tend to not see something that decisive very often. The inverse would also be an hourly close below this level. Could also take a short position, with the opposite being a hourly close back above this pivot as being your stop out. So those are just two trade setups based on this pivot. Pivots only work with those hourly confirmation signals if it's a very critical level. So you can't just, for example, draw a random line like we just say right here. You can't just draw a random line and expect it to work the same. The reason I have this one specifically is because this is the low we made from over here. And in order for there to be a cup and handle pattern, as I mentioned in this video, we have to make sure that price stays above this low that it made. Otherwise, first of all, it'll be too lengthy in terms of the duration of the handle in comparison to the cup duration. So that's one thing. And then two, this level over here is already a sizable dip for that handle. Otherwise, if it gets below here, then you're not looking at a handle, you're looking at a double top formation. So keep all of that in mind for this week. Another thing I do want to talk about here is Tesla. Tesla is an interesting ticker, specifically because you can see this downward trend line that goes back to all-time highs. It actually broke out of it last week, as you can see here, with this very large gap up. What's going to be very critical this week, kind of the same as the S&P 500 in regards to pivot. You can see here, this 274 roughly level is going to act as a key pivot for Tesla. So similar setup to what we're looking at on SPY, or at least SPX at that 4,385 level. Also Tesla right around this 274-ish level. If it breaks below decisively, specifically on the hourly candle, then first of all, you're going to see a retest of that downward trend line. And then if it was able to break below that, then you will see some form of a gap fill, which this would turn into a large distribution zone and be a very large fake out after such a large gap up. Now, does that have to happen? No, it's actually not my bias in this case, because it gapped up above two key pivots. First of all, this 274 line, and then also this downward trend line acting kind of as a pivot. There's actually an upward bias, at least for this week, as long as it remains above. So you're going to want to look at both of these levels, specifically this blue line. This is kind of like the make or break level around this 270 to 271-ish level. As long as price can stay above that, then you're looking at some more upside, or at least price maintaining around this 270 to 280 range. So for Tesla, this trend line break is very critical. this trend line that I just showed you. And as long as it stays above, there is more support. Of course, if it did break back below, which is definitely possible, we have a lot of fake breakouts throughout the market, then that's actually a very viable short setup. And of course, I would let you guys know that in one of the videos. Remember, we post every Sunday and Wednesday, so we'll be able to catch potential short setup there if it was able to break back below. But again, looking at the 50-minute chart here, it is a potential dip buy this week, as long as it can stay above this 270 level with your stop being under that. So another thing to watch for sure. And lastly, over here, just going back to the flow, if you look over here and filter for over 1 million in premium, you can see that quite a bit of this, at least super early in the day, like I shared earlier in the video, was put specifically on QQQ and SPY. Interesting enough, tech actually was call heavy on Friday. So NVIDIA, you can see here 915 expiration for also out the money 440 strike. Meta over here, we saw a couple of these 295 strikes, which are also out the money for 1.1 million in premium, 1020 expiration. Remember, September and October are fairly close expirations considering the time range that we're looking at right now. So these are aggressive bets. Also, you could see Tesla, a couple of those on there. This one's a leap for out the money leap, that is. But for the most part, tech actually had really bullish flow on Friday compared to what we're looking at for the S&P 500 and QQQ. So there's still a potential that something like Tesla can stay propped up and maybe another sector in the market sells off, and we see that break of this pivot over here, and we see that pullback, which would be very good for those whales that bought puts on QQQ and SPY. And then you'd also see big tech stay relatively up, and then there would just be a short-term correction / pullback. But of course, always good to look for confirmation throughout the week. Confirmation being this pivot right here. And of course, on Tesla, if you are interested in a trade setup on this one, you're going to want to look at both of these, both the 274 and roughly 270 level for this downward trend line. And other than that, appreciate you guys watching this video as always, and I'll see you guys next time on Wednesday.